This is BA here from Trading Tops and Bottoms with another edition of the Weekly Perspective. It's a review for last week's actions for stocks, futures, and Forex markets for November 5th, 2017. Let's get started. Just a quick look at the disclaimers. You can come back and review those later if you need to. Recap for last week's daily TNB report. Just to remind you, the daily TNB report is the end-of-day service where we scan penny stocks, all the stocks with options, futures, commodities, and Forex markets for tops and bottoms. So we come up with just a plethora of potential opportunities every trading day. And this is kind of what we've scanned for the weekend, roughly 33 penny stocks, 29 stocks that we can play options on, 4 futures markets and 2 Forex. And just bear in mind, that's just one scan. I have about 4 that I run, but we come up with plenty of opportunities. So this is how we fared last week, just running through the list quickly. We closed out our bond futures trade, profitable trade. I was hoping for a little bit more on the downside. It just didn't happen, but we closed that one out pretty with a pretty good run. For GE, we're still in that trade, even though it looks like GE is going out of business. I bought myself plenty of duration. Again, this is a dogs of the Dow play, so I'm not too worried about it. We're down. We're probably about at the 50% loss level for where we, for the max loss. So we're in fine shape. With about 3 or 4 months of duration to go, so still looking pretty good there. Penny stock, we're still in the trade. We're down slightly in this one. GAHC, we're penny stock, just down slightly in this one. BTCS, we're in that one. I think this one's off pretty close to our stop loss. I think our stop loss somewhere around 9 cents on this trade right here, so I think we're pretty close to that one. PN, we closed that one out for a profitable trade. AKS, we had a really nice run going, and that thing just collapsed. I think it was Thursday or Friday, so we were out at a break even for that one. IBM closed out, very profitable trade. It penetrated to the low side. So it was time to close that out. That was a really big winner. UNP, we're still long. We got in on 10.20. That one's doing just really nicely for us. So we'll stay in on that one. May look at taking about half of it off this week if we get a good run up. DPW, we are long as of last week. So that's kind of a recap of what we have going, or what we have as of close of business Friday. All right, let's take a look at some of the major markets here. And these are kind of what we call, the next few slides are the markets that rule the earth. So it's our major financial markets. So the first thing we're going to look at, we have a quad chart up here of this S&P 500 on the left top, the NASDAQ on the upper right, the Dow lower left, and the Russell lower right. So I just wanted to give you a weekly chart of each of those, just so you could take a look and see that it's just been up and away. So it's no end in sight for any two-sided action in the stock market. Premiums low, never seen before levels. So no need to go in there and try to sell options in a market like that. This is just way too dicey. I stopped selling premium about probably 6 months ago. Yeah, I think it was a little over 6 months ago I stopped selling premium, and it's just gotten worse since. So you can't trade the indices like this. So that's a look. You can see we're really close. I think we're within about 35-40 points of a projection for resistance in the S&P 500 that I've been waiting for. So we're really close to that. And these others, that if you take a look down here at the Russell, this thing's just in a consolidation period, which could, one thrust up, it could take it up into the highs. I mean, just look at the Dow. There's only like between 4 and 6 stocks that rally that thing every day. So Boeing being one of the consistent ones. We're definitely in a marketplace where it's not, you got to be a stock picker or just trade the stock market indices. Interest rates, we'll flash those up. Over here in the upper quad is the 30-year interest rate. Over here is the 10-year interest rate. The lower left quadrant is the investment grade bond fund, and over here in the right lower quadrant is junk bond fund. So I wanted to just take a snapshot of those and just show you, here was the low in mankind, just the mankind low in interest rates over here. So, and I know I'm just a little guy sitting in Fayetteville in a home office, but telling you that, we will never see that interest rate again. Your kids will never see that interest rate again, and there is a good probability that your children's children will never see that interest rate again. We were in some very, very unique situations, environments. So, hey, I hope everybody refinanced if you were carrying rates, mortgages, loans, or anything like that, took advantage of those low interest rates down there. We're still in a low interest rate environment, as you can see here. 30-year bonds closed at 2.82%. 10-year notes closed Friday at 2.34%. We still have a way to go before we get to the 4% operational environment. So for me, the operational environment where markets could potentially turn around in is that 4% level in interest rates. That's usually when the Fed has started to jack rates up a little bit and economy starts to heat up. So we're not there yet, but we're closing in. So hey, the trade for the next 30 years is, keep in mind, these are interest rates. When I talk about bond futures, I'm talking bond prices, but these are interest rates right here on the top two. Lower quadrant, this is a bond price. So as well as the junk bond fund bond prices. You want to see junk bonds usually go with the stock market, so there's no divergence in prices for junk bonds and prices for stock market. Typically, if there's a bid under one, there's a bid in the other. All right, commodities, taking a quick look. We've got the ag business, MOO, up here in the upper left quadrant. We have cattle, the upper right, corn, bottom left, and coffee, bottom right. So I wanted you to take a look at about four markets. Top of the heap, bottom of the heap, just so you can kind of develop a strategy if you're interested in trading these. We see that MOO over here, the only way to trade this is pullbacks. So you get a pullback, you're looking for another thrust higher. That's the game in a market that's gone straight up, at a 45-degree slant. Pulls back, you got to bet that it's going to go higher. So those are. That's why I have the top two listed up here. Same for cattle. Really strong move up here in cattle. Any pullbacks on the daily time frame, and you want to buy breakouts, betting for higher prices in the cattle market until it proves you otherwise. Here in corn, we're waiting for corn to show us some action so we can get in on the long side. So when we do trade corn from the long side, you got several possible plays. You could trade this ETF if you wanted to. I prefer the futures markets. You could just buy the futures outright, or you could buy puts. So it's a fairly liquid option market in the futures contracts. So that's a way of looking at corn there. Coffee, same fashion. It's trying to set up with a really nice double bottom right here. So we're just waiting for coffee to show us something as well. So it's, even if we miss it, it runs a little bit to the upside up here. Closing in above this most recent weekly red candle. Even if it closes blue up, then hey, you still got plenty of room to run. If you decide to trade Joe with options, buy yourself some duration. Give yourself a couple of months out. Give it time to run. It's the only way to play these things. Let's look at some energy markets here. So we've got natural gas up here on the left quadrant. We've got oil, USO, on the right. Bottom left, we've got gasoline. Bottom right, heating oil. So you can see nat gas on its lows, oil, gas, and heating oil, ripping up to their highs. We've got some really strong bids in the energy markets right now for the commodities themselves. We primarily trade crude. That's one of the things we look at. I trade that a lot intraday, after hours. So, but the time frame I trade, it really doesn't matter what it's doing on a daily time frame. But if you're trading anything at all, any time duration past 2 to 4 weeks, then you want to wait for pullbacks in the daily in the crude market and try to buy those. Again, you're trading from the long side until it stops. Gasoline, I just wanted to show you how gas looks compared to oil and how heating oil looks compared to oil too. You can see they all made lows, at different times here. Even when crude made a little low right here, heating oil made a low, gasoline made a low. They all make their lows about the same time, but the magnitude of the lows are what I'm really interested in these markets. So they can set up, and what we look for is the highest probability setup with the least amount of risk. So simply by looking at crude, heating oil, and gasoline, they may not move the same, but the turning points are almost identical in these markets. So you might want to take a look at those if you're trading them, just to see if you're getting ready to put a position on an oil. You might want to look at heating oil or gasoline, and see if you have a more favorable setup in one of the other markets. Take a look at the FANG stocks, the big MOMO or the momentum stocks. We just want to stay with these stocks until they stop working. We're in an environment, folks, where it's no telling how much these things are going to run. So they're just keeping the pedal to the metal. They keep chugging higher every week. We've got Facebook over here, Apple, we've got Netflix, we got Google, got Alphabet. So again, any pullbacks at all on daily time frames, you want to look for buys to the upside. It's the only way to look at these right now. Some more momentum stocks. It's the FANG Plus element. We've got NVIDIA up here, which is just continuing to crank. Priceline is one that wiggles a lot more than the others, and when it does wiggle, it wiggles big, but the trajectory is always higher. So you can get into some good at the money call spreads or debit spreads, or buy some. It's an expensive stock, so you almost have to trade spreads in Priceline. But anyway, that's one to keep an eye on. Hey, Qualcomm, we need to start watching that one. Look at the move Qualcomm made this week right here. $50 all the way up to 66. In one move, one week, it completely eclipsed, took the low out and the high of that island that it's been trading in since the first of the year. I mean, in 1 week, it did one full, 10 and a half months of price movement, all in 1 week. Just simply amazing. So something's going on in Qualcomm right here. We're definitely going to watch it, keep our eye on it, and again, any pullbacks on the daily time frame, we're going to look to be buyers going out into the future. Wanted to just give you an update on Red Hat. I don't know if you remember, but it was trading 95, 96 bucks a share, somewhere back in here whenever I recommended Red Hat. I told you I was buying a lot of calls on that one. It's pretty much performed to standard. I'm holding out for more. I like this formation right here. I'm still long. I haven't taken anything off. I've got this one in every account I own, a lot of them. It's made just higher lows, 1, 2, 3, 4, 5, winding into a really tight triangle there. Typically that's very bullish. It can go either way, but that's typically a bullish pattern. So we'll see if we can get any more. I was hoping we'd get 135 out of Red Hat. That would be a very, very nice trade. Retailers, I wanted to show you Amazon. And really Amazon versus a lot of other stores. So we got Amazon up here on the left, Walmart right, CVS down here lower left, and Macy's lower right. So of course Amazon's just trucking right along. No let up in sight. You can take a look at Walmart. Walmart's, from a large retailer, Walmart's holding it on. It's doing price action's holding up very nicely. So all of these stocks here on the top, again, pullbacks on the daily time frame. You want to be looking to be a buyer. It's all you have to treat all of these stocks that are just continuing to make new highs. Any pullbacks you get, any consolidations you get, you got to look for higher prices. That's the name of this game right now. CVS, again, a lot going on there. Maybe some of it is due to Amazon. Who really knows? But anyway, CVS is definitely not participating in this rip-roaring bull market. Nor is Macy's. Macy's looks like it's going out of business with GE. Both have a race to the bottom, seeing who can get to zero the quickest. So, guys, one of the common things we'll talk about later is just the plethora of stocks that are getting creamed right now, when a handful of stocks are propping this thing up. So we need a healthy market for this thing to keep going and chugging and moving on. We'll see if we get any rotations. All right, biotechs. Now we're getting into a couple of areas that I really, really want us to pay close attention to. Biotechs have been hit hard. They can scream very, very rapidly to the upside and also to the downside. But we've got the ETF over here, BIB. We've got Celgene on the right, Regeneron left bottom, and Amgen on the right bottom. So this is kind of our gauge, the BIB is. But what I really want you to look at is we need to keep a close eye on Celgene. Celgene could recover this very quickly. So I'm going to put this one on my radar screen just to watch it for nothing less. I think the volatility is going to be very, very good in Celgene going forward from here, which will give us plenty of opportunities. Regeneron, same way. Seems like it wasn't yesterday when I was trading this thing and it was $150 a share. Now it's made a high of about 540. Anyway, it's pulling back. We need to keep an eye on all of these biotechs. When the fuse gets lit, these things can just scream higher. So I'll be looking at inside this industry group a lot closer as we move forward. Weed stocks, a big news this week is Constellation Brands, one of the largest beverage distributors around, has agreed to buy 9.9% of the largest publicly traded cannabis company. It's this symbol right here, TWMJF. TWMJF. That's the stock symbol. It's a Canadian company, trades over the counter here in the States, but you can see that news has ripped it right higher. I keep telling you guys, there's a feeling about these weed stocks I can't put my finger on, but I don't know if there may be legislation coming out. There may be more states coming out. There may be other countries coming out legalizing marijuana. If that happens, or they loosen the regulations on these things, oh my gosh, guys, this could be huge. So I'm going to keep my eyes on some of these. I'm going to start building some positions in them, just in case. A lot of these weed stocks here are cheap penny stocks, so you can spread a few thousand out amongst these things, and they'll either grow like weeds or go up like the ganja smoke. So anyway, I wanted to throw some other charts up just so you could take a look and see how these things look on a weekly chart. Here's MBII. Nice little pattern right here. You can see that shelf that it creates right across there. It seems to have support. We'll take a look at that one. If you wanted to wait, you buy it above $1.30. Here's one RSSFF. Nice pattern there. It's formed a low, rallied, bounced off of that about 2.5, 3 cents. Shot up, come back down. This is a typical pattern, guys, of penny stocks whenever they're trying to show a little action. And this one settled back down, but they haven't drove it back down to the floor yet. So about 5 cents a share is what it's going for. Put you in alert for around 7 cents. If it goes back above there, then yeah, you might want to pop in. I already have a position in CAMDF. I bought at 34. It's at 32 right now. Probably add more to it Monday. This is a good little pattern. I like it. Nothing says it has to go higher, but it goes down, hits a bottom, rallies, comes back, tests it, sneaks under it right there. That's my scenario 1 trade, and then goes back up. So forms a little shelf. So I really like those kinds of trades right there. Next, few more of the ganja stocks. So we've got another nice pattern here in ZYNE. Looking to buy some. We didn't get filled at 1020. I don't know why. I went back and looked at that several times, but it's still in a good position to buy right now. I'm going to look at that one Monday as well. So in INSY, this one may be starting to find a bottom. We'll keep an eye on this one. Another good one, Vape. We'll see this one's falling right back down to where it had support last time, about 0.002 cents a share. Very, very inexpensive. You could buy 100,000 shares of that one for about cost of a couple of Big Macs for you and your wife. ETST, another one that looks like it's trying to find a shelf. Anyway, weed stocks are fascinating, guys. Don't know. It looks to me like there's something going on in that industry group that's coming out a little bit later. Who knows? Maybe next year or so, but definitely something a brewing. All right, VIX. Hey, we're right back down below the black line again, guys. This is all the way back to 87. The VIX readings, you can see that spike there. Of course, that was the crash at 87. Hey, we might even see 7s before this market unwinds. Anyway, we keep going higher every day. Just want to give you frame the implied volatility environment, and right now it is very, very slim. So that's why I'm playing mostly directional trades. Dogs of the Dow. Hey, all these stocks: Verizon, IBM, Chevron. These are all trailing the S&P's performance for the year. They have a historical precedent record going back decades that show these stocks, these dogs of the Dow, typically come back and trounce the S&P 500. They haven't done it so far this year, so just keep tuned. There's still plenty of time for these things to light it up going into the end of the year. Play these stocks to the upside. Breakouts on the daily is a good way to play them. And we're in a bullish time of the year, so there's nothing say. Even though we've been bullish since last October, hadn't had a down day since. Nothing saying it's going to stop right now. The only one that's really bucking the trend is GE. Even though I have a position in GE right now, we want to wait and give this thing a little bit of time before we look at trying to probe the bottom again in it. Forex markets. She got 4 markets right here that we have some potential trades going on next week. Just wanted to give you a show at what we're looking at. So the euro US dollar, I'm looking for a possible short trade. The euro Japanese yen, I'm looking for a short trade in that one right there. Australian dollar and the New Zealand dollar, I'm looking for a potential buy. We're looking for a buy setup here in the US dollar, Canadian dollar. So we've got a couple of potential alerts out in the Forex markets for next week. So here's our takeaways from last week's action. Record highs again, same thing has happened for the last 11 months. There's no change under the hood. Majority of stocks are getting just absolutely creamed while the indices continue to go higher every single week. SPX is approaching that projected resistance level around 2614, and we are starting the 13th month of one-time framing on the monthly SPX, on the monthly SPX chart. So that's just a phenomena that we've never ever even remotely come close to. I mentioned Constellation Brands moving into wheat stocks. Apple's closing in on $1 trillion. Trump's pushing all the angles of tax reform. The never seen before stats and unbelievable under the hood readings just continue to be recorded week after week after week. Stay long and prosper. Our summary: stock market, no change, no premium, no selling options, so avoid the indices at all costs. Bond market, we are in the throes of a secular bull market in interest rates, bear market in bond prices. So any bond future move that goes 7 to 10 points higher off of any low, you want to look to be selling bond futures or getting short somehow bond prices for the next 30 years. Commodity markets, we're waiting for trades in corn and coffee. Have one trade setting up in wheat we'll take a look at. Might get some action in that one this coming week. FANG stocks, wait for any breaks in the FANG stocks and trade them all from the long side. Dogs of the Dow, buy the dips in the dogs, except for GE, let it find a bottom. Winning sectors, we're waiting for pullbacks, but we specifically want to watch biotechs and weed stocks going forward. Forex pairs, we have a couple for next week where we may have some trades. Guys, that's a wrap for this week's edition of the Weekly Perspective. Hope you enjoyed that quick rundown on a lot of the different sectors in the market that kind of frames our economic landscape. So if you want to contact me for anything, here's our website address, email addresses, and anybody looking to subscribe to the Daily TNB Report, just click on that link there. Have a nice trading week. This is BA signing out.